In this video, we're going to give a financial perspective on insurance broker and agency operations. And we'll review a couple of common financial transactions that insurance brokers experience as they run their business. So why is finance important? Why spend any time on this stuff? Well, everyone at an insurance broker should understand the impact of their actions on the finances of the business. And it turns out that finance is more logic than math. Everyone can and should understand the basics. And there's accounting that's happening behind the scenes of every transaction that occurs at a company. And how the company keeps track of it all becomes very important to the success of the company. Here's a game board that we'll use for the scenarios. And you can see that we've got a high-level income statement and balance sheet depicted on the game board. In the real world, the statements have much more detail, but we've simplified them to help illustrate the points in our exercises. And what we'll do is move the coins that are shown in the bottom left on the game board to represent money flowing through the statements. And we'll make each coin worth $1,000. First, let's set up the financial statements for the current condition of the company. And in this case, we'll say that our company has $5,000 in cash, $2,000 in capital stock, and $3,000 in retained earnings. And if we set that up on the game board, you see that we have $5,000 in cash, we have the $2,000 in capital stock, and we have the $3,000 in retained earnings. And importantly, the balance sheet balances with $5,000 in assets and $5,000 in combined liabilities plus equity. And so far, we've just set up the starting point of the company. Now let's actually sell an insurance policy, and let's see how the financials are impacted. We sell a direct billed insurance policy for $30,000. And by direct billed, we mean that the carrier is actually billing for this policy. But the carrier will also pay us a 20% commission in cash within 30 days of selling the policy. And let's say that we'll pay the selling team a 33% commission in cash as well. And we're going to have to pay selling expenses of $1,000 in cash in the same period. And we've got to pay taxes of $1,000 in cash as well in the year. And the challenge is, what changes on the board? How do the financial statements look at the end of the year? Well, let's go ahead and play it out through the financial statements. And of course, you can pause the video and play it out yourself, and then come back and see how we worked it out. So the first thing that happens is that we have revenue. So we've sold the direct billed policy for $30,000, but we get a 20% commission, which is $6,000 net revenue. And that means that our cash goes up by that same $6,000. We were paid that commission in cash, but we've got some expenses. We need to pay a 33% commission to the selling team, and that's 33% of $6,000 is $2,000. We paid that in cash, so boom, $2,000 leaves our balance sheet, leaves cash. We also have other expenses of $1,000 related to selling that policy. We said that we'll pay those in cash as well, so $1,000 leaves our cash account. We've got to pay those taxes, $1,000. Out goes another $1,000 from cash. How does it all net out? Well, net profit is $2,000 after it's all said and done. Everything looks good, except that, unfortunately, our balance sheet does not balance. How are we going to make it balance? We're actually not going to do anything. The reality is, whenever we have a positive or a negative profit, if we don't pay it out as a dividend, it then goes over into retained earnings. And our balance sheet balances at $7,000 in total assets and $7,000 in liabilities plus equity. Okay, for our next scenario, let's clear the game board and let's buy a computer system. What we'll do is we'll say now that the coins are not worth $1,000, they're suddenly worth $100,000 each for this scenario. And let's say that we're going to borrow $500,000 at 0% interest on January 1st. It's going to be paid back in the form of a balloon payment 10 years from now. And let's say that with that money that we borrowed at 0% interest, we're going to buy a system for $500,000 in cash on January 1st. And over the year, we're going to use that computer system, and we're going to depreciate it straight line, that is evenly, over 5 years. The challenge is what changes again on the board, and how do the financial statements look at the end of the first year? And again, if you'd like to play this through yourself, pause the video and come back. You can see how we worked it out. Okay, we said that we borrowed $500,000. We have long-term debt. It's not due for 10 years. And our cash has gone up by that same $500,000. And we're going to take that cash and we're going to buy a $500,000 computer system with it. And we're going to use that computer system. So we're going to have over that year depreciation of $100,000 on that computer system. That means that we've got a depreciation expense, all else being equal, that's going to hit the income statement in that year and cost us $100,000. If that's the only thing that happened to us over that year, we've got a negative net profit of $100,000. So if we go and look at our balance sheet, again, it doesn't balance because we've got $400,000 remaining in that computer system as an asset. We've got that long-term debt that we haven't paid back yet at $500,000. But as in the previous example, if we have a positive or a negative net profit for the year, that flows over into retained earnings. In this case, it's a negative, so it reduces retained earnings by $100,000, and boom, our balance sheet balances. And if we play that out or take a look at it over the 5 years of the life of that computer system, you see this process continues such that by the time that we're done with using that computer system, the net book value of that system will be zero. This is how we account for that over the 5 years. Okay, here's what we covered. The income statement and the balance sheet and how money flows through these statements. We talked about how the balance sheet has to balance. And we also saw that profit doesn't always equal cash. There's accounting that's happening behind the scenes, and the income statement and the balance sheet are linked together. Okay, that's a quick financial perspective on insurance broker operations. And if you'd like to take the next step and bring these numbers alive, contact Prism to find out more about our Broker Challenge business simulation. Thanks for watching.